Hello, everyone. Welcome back to our podcast. So, today's topic is one of the most, let's say, painful and common realities in trading. So, why do traders blow their account? It's a very important conversation that needs to be done, right, Michalimu?
Yes, I completely agree. It's something that some traders experience. Some traders have never experienced it. Hopefully, you are one of those traders that have never experienced it. But of course, even for new traders that maybe are new in the market, maybe they haven't experienced it, I think this is a great podcast because we can talk about it so you know and you're aware. I mean, of course, we can look at certain techniques and things that you
Mhm.
guys can keep into consideration to make sure you avoid blowing your account. So yes, it's definitely something which is an important topic, very popular, and I think it's important for well, Andre, I'll say beginner traders and the experienced traders as well.
It's everyone because basically some of the most common mistakes is not only, I mean, the lack of knowledge or the lack of preparation, let's say. It also has to do with the emotional control as well. So this is what we're gonna cover today, or the we're gonna cover the most serious mistakes, and we will try to help you basically to, as Michal said, to avoid them. So it's something that is usually avoidable. Okay, everyone at
Yes.
some point. We are human beings, right? So we do mistakes. So this should be a lesson to try and avoid it. So shall we start by unpacking, let's say, the top reasons why traders blow their account? Is it
I
just to
think
do
it's
what you can do differently, basically?
I think it's a good idea. I mean, like Andrea said, it's something which most of the time, 99.90%, it's avoidable. Of course, everybody makes mistakes, but the difference is to have a planned and responsible approach so that mistakes that everybody makes is nothing more than just, like an expense. When you have a business, there's of course the money coming in and then there's your expenses. But what you'd like is, of course, you to be profitable. So, yes, there's expenses, but you want the money coming in to be able to cover that and for you to be profitable on top of that. So, we
Mhm.
want to ensure that the mistakes is not something which is detrimental to your account. And there is, I think I would say, maybe five, Andrea, key reasons potentially why traders may blow their account, which people need to concentrate on. Should we maybe go through them
Yeah.
step by step?
Yes, I believe something to start with would be uh, uh, over leveraging. Let's
Hmm.
say the most obvious one. Let's say let's start with the most obvious one, which is the over leveraging, because people get excited, and this is where they fall into their greediness, I will say. So,
Yes.
guys, the most obvious, and I think the most common as well, is the over leverage. That's the fast track, let's say, to a blown account, especially if you like if you overdoing it. Because okay, we are human beings, right? So we get a bit greedy. We want to profit fast, so we get excited, and we sometimes we overdoing it. Let's say so. It's very important to um, to consider. I mean, to turn your potential position before basically entering the market, to consider your leverage. What does it mean? The leverage that you chose, what does it mean? How much the profit will eventually be, which was
Hmm.
nice, but how much the loss could eventually be if something turns on your against you, right? So big profit is a good thing, but big loss is like it's like a nightmare. So
Exactly. Exactly. I mean,
what what do you
leverage, just
think?
so everybody's aware, guys, is when we when you have a trading account, one of the characteristics which you can apply to the trading account is leverage. Leverage is, it's got benefits and disadvantages as well. Like Andrea said, in terms of profit, it's something which can be very beneficial when you're profiting. But if you're not careful and trading with the right leverage and using the right tools, then of course, if the market's moving against you, if you're not controlling that, then of course it can also be equally negative as well. So definitely, I would say one of the key reasons why traders uh, may potentially see a large portion of their accounts witness a loss or even completely blow their account is because they're over leveraging, or it may not necessarily be a case of over leveraging, but I think it's also maybe, Andrea, not understanding leverage as
Exactly.
well. I think
Yes.
that's also important. I mean, what would you say traders have to take into consideration when trading with leverage?
I think the simplest thing to say is that in order to realize, guys, um, how significant the leverage is and what how it could affect your account is you need to, is what I said initially, is you need to do the maths, let's say the calculations. There are a lot of free tools out there, calculations in our website, calculator, sorry, in our website, in order to help you before you enter a trade to put the parameters, leverage, margin, target level, everything that you're gonna use in order to understand whether the what you're risking. You need to realize that whatever you risk, you need to afford it first. Don't risk more than you can afford. And as Mihaly said, you need to understand the basics. You need to
Hmm.
understand what leverage is. You need to understand what margin requirement, what are the margin requirements, and you need to always um, risk what you can afford to lose. I think
That's
if you
something
have
very
this in
important.
mind, this is covering everything, right?
I think so. I mean, what Andrea mentioned is spot on. It's very important that everyone understands. A lot of people, when they think of leverage, they think to themselves that, because we're increasing your buying power, they look straight away at the benefits of, for example, if I'm interested in buying gold CFDs, gold normally is worth 3,500 approximately. Of course, there's a lot of volatility nowadays. But they say to themselves, with a leverage of 1 to 100, I only need $30.
Hmm.
That's an amazing thing. But like Andrea said, it's very important that you look at, if I'm going to reach my take profit, what does that mean? How much? Yes, okay, because I'm using leverage, I've got a much lower margin requirement. But in terms of my target, what does that mean? If I'm going to hit that target, is it $20? And if it's going to move against me and I put in a stop loss and again it's $20, you need to look at that and compare that in comparison to your account. Because if you have $30 in your account and your stop loss is at $20, it doesn't make much
Yes.
sense. And so it's very important that people look at, exactly like Andrea said, the mathematics behind your trades and leverage. And, the great thing about HFM is that, we've got a HFM app where you can also set it up not for it to show you more, should we say, trader terminology such as pips and pipettes and the lots, but you can set it up so it's just showing you the cash value, the cash value. So if you're putting a stop loss somewhere, it will show you, that's $5, that's $10.
Hmm.
So then you very easily can look at, in comparison to my account, is that something which is responsible? If I have $1,000 in my account and my potential profit is going to be $50, my potential loss is $5, potentially that's something which you are comfortable with. If the loss is $1,000 and your account is $1,000, then of course I'm pretty sure 100% of everybody is going to say, okay, no, I need to change something there.
True that. True that.
What about a different reason? I mean, leverage definitely is a key reason. I think it's very key. Like Andrea said, it's key that you understand it, that you look at the mathematics behind what certain volatility will mean for you and your trading account. But what's because you mentioned psychology at the beginning, that's to me that's something very interesting in terms of psychology. What bad habits would that trigger that um, can also trigger traders seeing large losses or blowing their account?
Ah, basically, okay. There is. I have seen a lot of things over the years happening, and in the end, they had to. They were correlated with the emotions.
Hmm.
Sometimes it's the need of is the greediness. Sometimes
Great.
it's a kind of a revenge trading. Sometimes it's the excitement that people feel when their positions like is profitable. Or I can see a lot of I mean, desperation is also something that can affect
Definitely.
trading and actually can lead to uh, poor decisions. In general,
Hmm.
guys, you should know that trading on emotions is dangerous. And I mean, you might think that you can control yourself, right? I mean, we feel that, yeah, I can do it. I mean, I'm not like others. I can do it. I'm not emotionally driven. I have discipline. It's not like that. When you're risking your own money, unfortunately, you get emotional. So it's
Is that one of the
something.
reasons why maybe
I mean,
they do revenge trading?
exactly. I mean, uh, it's because it's a bit of a we have ego, right?
Hmm.
And the ego kicks in, especially if you take a loss. And we don't want to step back. We don't want to at least break even. So ego kicks in, and we want to win it back, let's say. And instead of pausing a losing position
Hmm.
or trying something else, I mean, instead of that, we what we have seen over the what I have seen. I mean, when I talk with people, you're doing webinars as well. You discuss with clients. So one thing that I have noticed, and it's quite common, is that instead of closing a losing position, say, okay, I have mistake. I was wrong. Let's close it. Let's end it there. Instead, they increase the risk just to stay and hold the position, the losing position.
Yeah,
Um, this is something that I can that I get as a feedback very often, and that is the so-called revenge trading.
exactly, exactly. I
Well,
think it's a big trap that a lot of beginner traders can fall into. Revenge trading, not closing trades, which have a loss, trying to risk a little bit more, give it some more time because they're not willing to close it. Um, but also, we need to take into consideration, you know, it's if you're going to give time to a losing trade, a lot of the time they won't give time to a profitable trade as well. And then it kind of has, should we say, a negative reward to risk ratio. You're willing to risk a lot, but you're not willing to give the market time to earn a lot as well. So it's a bad habit. Sometimes traders, when they're in a little bit of profit, they'll quickly close the trade.
true.
And then at the same time, if the market moves against them, they won't close the trade. And then it just has a negative reward to risk ratio, which can be a big bad habit and can sometimes trigger large losses or tradings accounts being reduced significantly.
What is your advice for someone to, let's say, control ending up with a revenge trading? I mean, what would be your advice?
I
How to
would
avoid it, let's say, how to remove emotions away from trading?
I would say to have a trading plan, okay, and to look at that trading plan as nothing but numbers, okay. So it's not about you in any way, shape, or form. It's not even about the market. It's not even about, market analysis. It's simply statistics. It's simply mathematics. It's like, for example, I read a book by a very well-known economist. I think it was from the 90s or 80s where he was active. And he said, I've only got a 5% success rate. So if I'm opening 10 trades, or should we say, for example, 100 trades, only five of those are profitable. He's only got a 5% success rate. Now, a lot of people are thinking he's not successful. He's definitely not profitable. That is very low. But if you focus purely on the statistics, okay, so for example, yes, he's only got five trades profitable, 95 trades he closed in a loss. But if that 95 is very controlled losses and those five are seeing significant profit, then of course he's able to be a profitable trader. And you need to have the, should we say, discipline in order to do so, something like this. But you're able to do it if you're not thinking about you or the market, or profit. You're just purely looking at the statistics of trading, and that way you're able to remove, at least to a certain extent, the emotional side of trading. But of course there's lots of different
Yeah,
methodologies
no,
that
yeah, but it's what you said. I mean, statistics, having everything written down, having the probabilities on your side,
mhm,
it will definitely help you. It might not be 100%, but it will increase your let's say, it will increase your odds to succeed eventually. But
exactly.
more important than that, it will be that it will take the emotions out of the way. If you stick to your plan,
Hmm.
to statistics, what you said, as well, because when we said statistics, what I understand is get prepared about everything, calculate everything. How much am I risking? How much I might gain? How much of my capital am I risking right now of my account? How many trades have I opened today? How many I opened a month? Many of them were losing trades? How many were? So everything. I believe having everything down, and I mean, for keeping a track of everything you're doing correct, everything you're doing right. It's just give you
Hmm.
confidence, and helps you not to repeat some mistakes that
Yes,
you
definitely, because
yeah, it's like a
everything is being
blueprint, right?
tracked.
Yeah,
Yeah.
exactly. So having a plan, I mean, treat trading like business, every other business. Like,
Exactly.
if you're gonna open a shop, right? You need a business plan. So it's the same for trading. Having a trading plan, write everything down, even your setup, even your setup. Uh, because this is yeah, it's another mistake that we see that because prepared to what is a it's a quote, I think was from Jesse Livermore. I don't remember exactly who said it. It was failing to plan is like planning to fail.
Yes, I know that quote.
I
I'll
don't.
try and remember who said that, but I remember that it's a very well-known quote, and it's
Yeah.
true. It's true. You have to plan, and it's to plan based on your personal trade. To go to somebody else and say, he's a successful trader, I'm going to use that plan. That plan may not apply and be
Mhm.
successful to you. But if you sit down and look at your trading history over the past month and say to yourself, I've this month opened 100 trades. I've got a success rate of 60%. So that's 60 trades in profit, 40 trades are closed in a loss. Based on my statistics, it's not somebody else's statistics, it's my
Mhm.
statistics. How much do I need to earn? And how much do I need to limit my losses per trade, the reward to risk ratio. But you're looking at it not from an emotional side, purely based on your statistics, the statistics of your trading and your trading plan. And Andrea said something very important. By doing that, it's very easy to go back and say, where did things go wrong, or how can I improve my profitability? So, for example, if you've got, maybe this week you've opened 10 trades and 5 of them were in a profit, you can go back and say, on those 5 trades, if I put my take profit 5 pips higher, would it have hit my take profit still? And on all 5 occasions, if it still hit your take profit, that means that potentially you can increase the profitability and it wouldn't have an effect on your success rate. If of course you relook at those trades and you see, okay, if I increased it by 5 pips, none of them would have hit my take profit, then of course it's not something you can do. But you can do the same with also a stop loss as well.
Absolutely.
I think
One bad day shouldn't make anyone ditch their plan. It's just
exactly.
one bad day. It's my was due to I don't know, breaking news. It might was just a bad day. You wake up and you weren't like fully focused or something. A bad day is just a bad day. So um,
The important
yes,
thing is that it doesn't negatively affect massively your account. What tools, Andrea, do you think traders can use, or just risk management in general, that can ensure that they can limit those negative effects? I mean, what about stop loss? Should we explain the stop loss to a trader?
yeah. So before we explain stop loss, is the very first tool, as a tool, is having a trading plan in place, diary, recording everything that we mentioned earlier. Basically,
Hmm.
that's for granted. Uh, the second important thing is poor risk management, and usually, or really common mistake, especially for people that they just enter the forex industry or trading in general, and they are new basically in the industry, is the lack of stop loss.
Mm,
So
okay.
they don't really set a stop loss. That's a really classic error basically. uh, it's the hope, let's say, of it's a hope for a turnaround that can wipe out their gains eventually. So, guys, stop loss. Stop loss is a guarantee level, okay, a level in which will close automatically your position if the market turns against you. Okay, so it's a you must always have a stop loss in every single position, because this will save you from suffering major losses. Okay, eventually, because no stop loss, it means that with a flip of an eye, you might just blow your account, your entire account. It's like you're risking all your capital, the capital that you have invested and you have placed in your trading account. So uh, it's also just it's quite funny that retail traders, especially especially the new traders, the newbies, let's say, don't have a stop loss, but professional traders, institutional traders survive exactly because they have a stop loss and
Yes.
because they have a solid risk management in place.
Hmm.
And a part of risk management is always have a stop loss, and a realistic one, right? Because that's where the majority of people actually losing it a bit. So uh, one, I don't know. You might correct me if I'm wrong. Uh, Sometimes we see people having a stop loss and say that I'm doing everything correct. I have a plan. I have a stop loss. I have a target. Okay, where your stop loss is, and they tell me that they tell me a level, let's say, but that reflects to 10% of their account,
Yes.
of their trade or something. So
Hmm.
that that's like
It
that's a
needs to be
significant
something
thing.
that makes sense, of course.
Yeah. What should be, let's say, the appropriate, or at least a
Well,
appropriate level
there's many theories out
sent.
there. Yeah, there's
Yeah.
many theories out there. I mean, there's for example, it's very well known, the 1% theory, sometimes which is also applies to exposure. There's certain theories that state 2%, 3%. It depends on also the trader and the trader's risk appetite. It's also important to analyze the asset and see what kind of volatility the asset experiences traditionally, because of course oil is very different from the price characteristics of gold to the dollar and so on and so forth. So it's important to say to yourself, based on the price characteristics of the market and the volatility that it traditionally sees, you know, I need to put my stop loss here because that gives the appropriate amount of time and space to the asset to experience that volatility and then eventually move in my favor and hit my take profit. But simultaneously, like Andrea importantly said, it shouldn't amount to a significant amount of your account. So, for example, if it's 10% of your account and you have, five trades that are in a loss, then of course that's half of your account. Whereas if it was a smaller percentage, for example, 1 to 2%, again, and it also goes back to emotional trading. Your emotions and your trading sentiment will significantly improve because a bad trade is not an issue because it's a level of your account which you're personally comfortable with. Whereas if it's something you're not comfortable with, then it goes back to that trap of the things that Andrea was previously mentioning, such as emotional trading, revenge trading. So Andrea mentioned as well, some traders they keep their trade open, falling into that trap again. A lot of people, say what goes down must come up, so I'm just going to keep it open. But it doesn't necessarily always work that way in the financial trading market. Andrea, do you think also maybe it's not always the risk management and the stop loss, but sometimes it's also unrealistic expectations, maybe that maybe is triggering, should we say, a certain approach to the market, and that ends up having a negative impact on their trading, maybe?
That's another fatal, let's say, error, along with stop loss,
Hmm.
that it could be avoided. It could have been avoided if someone had a trading plan in place. So this is when you realize how important trading plan is. So yeah, unrealistic expectations. It's all about. It has to do with human psychology, with anxiety, greediness, everything. It's unrealistic expectations. So if someone wants to, let's say, he has $100 and he wants to eventually gain $10,000, that's the
Puts a
wrong
lot of
mindset.
stress.
Yeah, a lot of stress. It's unrealistic. It's unrealistic, really. It's the wrong mindset for someone to have, and unfortunately, social media fuels this kind of unrealistic expectations. Uh,
I think
okay.
it's human nature as well. I think that this has a negative. It's like, for example, everybody remembers maybe when they're at university, if your lecturer came and said you need to have 100% on this exam, it's probably going to have a negative effect because it's put so much stress and weight on your shoulders that actually has a negative effect. And the same applies, for trading expectations, uh, generally speaking, unrealistic. Like Andrea said, is it unrealistic that what I'm looking to do?
Yeah. So, y- uh, it will be done gradually, slowly, with ongoing education as well, adjustment of someone's strategy all the time. And actually, in my humble opinion, at least, targets really help controlling a bit all this greediness and the expectations that we have. So let's say put in some limits. Let's say today, or basically every week, I would like to gain at least $50.
Mhm.
Or and every week I will not open more than 10 trades, two per day.
Mhm.
Having some limits, some like let's say some limits. This is what it is. This will, I mean, keeps you in the loop, and obviously to be not to try not to try to try and uh, how can I say that, um, your targets, your goal, your aim eventually to be realistic. I mean, if you have $100, okay, let's start this week. I will be happy to make them 150. The week after, it will be 200. The week after, slowly to
Gradual
build,
gains.
yeah, gradual better, and to build your account, and to will be able to eventually gain more and more. So what's that's very important. I mean, yeah, and having a plan and some limits, some requirements will also help. What is have you noticed anything else that really leads to ending up basically with losing all of your money?
Well, in terms of unrealistic expectations, I think sometimes traders also they get into the wrong mindset of thinking of a figure. This is what I want. It's not about what you want. Sometimes it needs to be something which is mathematically viable. So this is why a lot of institutions, even if you go on institutions website and look at certain funds that they have and certain investments, you'll notice they won't put a figure there. They won't put you'll earn $1,000. It's always based on a percentage. So that's also maybe another technique traders can apply. Instead of saying I want $1,000, well, it's not about if you want $1,000. It's how much money have you deposited, and let's work off a percentage. Okay, it's are you looking to earn 10% a month? If you want $1,000, then this is the amount of deposit which is required. So sometimes it's also another technique to, instead of thinking about what you want and in terms of a figure, a currency unit, should we say, to rather look at a percentage of the capital in your account. I mean, just to conclude, Andrea,
Mm-hmm.
we mentioned quite a lot. It goes back to education as well.
True.
What educational services does HFM provide to beginner traders and even advanced traders that maybe want to improve as well, to help them to avoid these should we say bad habits in the market, to make sure that they can trade responsibly and in the way that they want to be trading?
Um, okay, other than our videos in social media, these conversations that we have between us, we also have weekly webinars that someone can register and attend into. Also, our articles, especially our articles, really help at least understanding more of the fundamental sides of the market, to be up to date with the news and etc. But for someone to start with, at least with something, I would really encourage our viewers to start with our webinars, and if and especially with the basic ones, if they are new to trading. So uh, to follow our to actually visit our webinar page to see what's coming for this month, and if there are no basic ones, we have always available our past webinars in the past webinar page as well, that they can start with, that they can actually view our webinars in their free time, right?
Great.
So
Yes.
surviving in trading is all about constant learning and being
Hmm.
up to date all the
Definitely.
time. So yeah, webinars would be a good start. What do you think?
So, guys, yeah, I completely agree. We got the videos on social media, like Andrea said. Some of them are based on analysis, some are educational, some about developments in the market. We've got the articles as well. But a big product, which is very helpful, and we of course look at a lot of things that we've looked at today, is webinars. So also feel free to look at our webinars. Like we said, you can register and get access to them and start learning straight away. It's very easy to register. But I think, Andrea, I think we've covered the main five reasons that traders may have, these negative aspects of trading, and also how to avoid them as well, which is the main
Exactly.
thing.
Absolutely. So uh, I believe that in order to, let's say, sum up everything, is just to advise our viewers to stick to your plan, right?
I
And
completely agree.
learn from your mistakes. Come back wiser, let's say. Uh,
Guys, I hope you found today's podcast educational. We enjoyed it on our side. Hopefully, you guys will enjoy it as well. Feel free to leave comments as well and share your own thoughts and own experiences as well. But I think we've covered everything, Andrea.
yes, yes, I agree with you. Thank
All
you
right.
very much.
Thank you, guys. Take
Thank
care.